TGIF Warriors, NFP Day. No freaking problem. How you doing, everyone? Hi, Laura. Brand, Jays, AJ, Paul, Michael, Alexander. Everyone doing okay?
Hey, Coach, we don't see your screen.
Okay.
And good morning, TGIF, buddy.
Yeah, you too, Blake.
Morning, all.
It was hard to get up today. So
Yeah.
S&P's going for that 4,300. They're going to turn it here. I just covered dollar short yesterday because of NFP. That was a great entry on yen. Blake, before I get to the other guys, you staying with it or did you book it?
No, I booked that short, but I tried picking up some dollar longs overnight, and that wasn't the wisest decision after yesterday's sell-off. So
yeah.
But I had to square up. I got to square up things ahead of jobs. The one thing that I will say is I'm trading a lot lighter than I normally do. I just I don't trust this market, and I think the thing is we're getting to those lofty levels in equities where we might get a last gasp, but we're also, we've got the jobs report where the NFP is expected another strong number, but the dollar's not leaning into it. It's interesting. I think today's going to be kind of a volatile day.
Yippee. So
hey, you like volatility, right?
We all like it. So Ryan, what lit up Aussie compared to other fiat pieces of crap currencies?
Is that a technical term?
Yeah, it's as technical as I could get this morning. So anyway, was there any fundamental news, anything out of China or what?
No, there has been a bit of news, but it was after all that moves happened. The economists are a bit split over next week's hike. 2/3 are going for a pause, the rest are going for a hike. So they don't know what they're doing over there. I don't know. I just think this is a bit of a blow off the bottom. It's been pretty depressed over the last few sessions. I think it's just given a chance to stretch its legs. A few shorts, probably, like Blake said, taking some chips off the table into the data. It's broken up through the levels, but it's pausing at the moment.
It's probably at some fib level. Look, this moving average is coming in right here at 6.5 on the 4-hour. So it's
done a bit. Yeah.
This area was tough.
Longs off the bottom are probably thinking, I don't want to give it all back over the NFP, so I'll take a bit off. And shorts are thinking the same thing. They don't want to see a rally up to 60, 67 and undo all their hard work over the last few days.
So what are you doing here? You doing anything in the yuan?
No, I'm looking I want it closer to that 7 level,
breakout.
Down to that 702, 703.
The breakout.
Yeah. Trying to break out area.
Yeah. Okay. Well, that would mean, we'd need some more dollar weakness, right? For it to get down there.
Yeah.
Okay. So oil had a big day yesterday and getting some follow through today. So I thought we were going to come down here. Now it looks like it could be trying to put in a higher low. That also helped the market because this was one of the weakest groups. And what's going on with the yields today? So we're right there at this real important support level at 360. That's where it broke out. Now it's back to the breakout. Doesn't look like, unless we get a real strong number, then maybe we could retest that 386 level. Otherwise, it looks heavy to me.
Yeah, it stuck its nose under that 360. I think that was more on the confirmation of the deal through the Senate. And then it's got itself back at 360. And I think you can put all those candles in the rearview mirror as far as the debt ceiling are concerned, and we're trading the fundamentals. So, the NFP is going to be important, and the wages number is going to be more important than the headline number today.
Okay. Real nice rally in PM still. Yesterday, was it just a bounce with a weaker dollar, and we're going to rally up to here between, was it 1990 and 2000, then we have another leg down, or was this a pullback and we're blown to new highs?
Well, I think all eyes are still on the Fed, and yesterday we had a couple of members saying, I can't remember who it was, saying that a pause might well be coming, but it doesn't mean that it's a stop. I disagree with that. If a pause comes, I think that's it. And all eyes are on how much more tightening can they do, and what inflation is like. And that's the key. This is what I said on the Flow Show before I abruptly closed it by accident. I'm sorry, I apologize. Is that people focus a lot on employment, and quite rightly so, but over the past few years, COVID spike and COVID disaster excluded, employment has been pretty robust. The Fed has been hiking and tightening conditions, not because of good employment, but because of rising inflation. And now we're seeing prices and inflation data surprising to the downside. We had the ISM yesterday. The prices component was shocking. It was expected that 52 came in at 44 or something like that. And all this is pointing towards a relief lower in prices and on year-on-year inflation. Now, I'm not saying that things are back to normal. We need to see prolonged deflation, which we're not going to see. But as far as the Fed's concerned, job done. So once again today, I'm going to put more my attention more on average hourly earnings rather than employment, because at the end of the day, the market knows that employment is going to be relatively good. Is it going to be 200, 250, 150? Well, it's still good employment. The unemployment rate of 3.5%. This is not what worries the Fed. The inflation is what worries the Fed. So that's why, and my eye is going to be on that. And I think the dollar is close to a really important medium-term top. I thought the Dixie would get close to 105.5 before dropping a lot lower. I'm not sure it's going to get there, but I still think it's a 50-50 event. But regarding metals that you mentioned, my view. I think they're going a lot higher. I think gold's going to take out all-time highs and march on. But if the dollar does spike a little bit into 105.5, then we're going to see a little bit of pressure, downward pressure on that. But the other thing, of course, shock horror, the debt ceiling was passed. I mean, none of us saw that coming. I'm kidding, obviously. And we move on to 2025. Is it? When are they going to do it again? Something like that?
Yeah,
and,
2 years after, the presidential election next year.
Yeah, there you go. And we're going to have the same stuff. We're going to be talking about it here. And people are going to be saying, oh, I really think it's different this time. There's a lot of dissenters in the Senate. But I don't believe that. So it gets passed. The market reaction tells you all you need to know. It's not a big reaction in any way. Markets was mostly baked in that it's going to pass. But what I've been saying for a few weeks now is I would be very careful being short risk. And in fact, I said yesterday, when the debt ceiling gets passed, I'm going to buy the S&P wherever it's trading. So I woke up this morning, early Greek time. I saw it at 42.31 and I bought some. Not a lot, but I bought some. And I'm now taking my stops to break even and I'm going to run it through the NFPs and see what happens. And I think we go to 4,300.
Oh, we are at channel resistance, buddy. You're gonna pay for that one.
And there's certainly, whatever worries everyone's talking about, it's not showing up in the market. New lows in VIX. Yeah. So, there's an awful lot of complacency out there.
I just threw that chart up in the chat room too. I think it's a big deal.
Yeah. Yeah. I don't know. I didn't see the interview, but I caught a piece, just the gist of it, that Lynn Alden thinks that once this package is passed, that it could roil the markets for a couple months. Everyone's saying that the downside of the debt deal is supply. of treasuries and liquidity leaving other places to have to go there. So we'll see. When does Biden sign it? Did he sign
It'd
it?
be by Monday, I would assume.
Yeah.
I mean,
Okay.
you know, I mean, if it passed the Senate last night, I mean, he might actually end up signing it today. Who knows? If he remembers.
I will point out that even though the VIX is at new lows, it's diverging for the 985th time.
And also just also keep in mind for daily sentiment index for the VIX is at 13, so it's pretty extreme as far as bearish goes. So it's something that should be noted.
Yeah. And copper in this environment, we're getting a little bit of recovery. I don't know if we could declare a bottom, but when we were up here, it measured 350, didn't quite get there, but not sure if you want to be selling rallies in copper either. So going into the number without a lot of conviction, my plan is that if it happens over the next week or so, is to try and re-enter longs as close to 102 as possible. See what happens. If then maybe Stell's right and they get that 105.80, but 102 is such a big area that, and it's simple tech, 50% back. See what happens there. So I'm ready to surrender the charts to whoever wants them. Talking about any kind of action that you're thinking of taking into the number. I listened to my alarm go off late.
It went off a little late today. Yeah.
No, it went off on time, but I just kept listening to it without turning it.
You hit the snooze button.
It's on my phone, so I don't know if I have a snooze, but it's a blues thing. So it's pretty loud. It's enough to say, oh, you can't sleep through this, Dale. Anyway, I'm certainly glad it's Friday.
Well, let's talk about, like you were just talking about copper. For those that didn't see it, copper's bounced off the 618 retracement. Really critical support. As far as I'm concerned, this trend line that's in dotted trend line here, that's where the bulls need to hold it. Now we are back at the 200-day moving average right now, and we're at previous support. So chasing copper up here, I don't know. China's finally starting to bounce a little bit, so maybe that's helping out. But if you look at, at the Hang Seng, we're actually, right at previous support, and the CNH or China 50 right now is bouncing towards previous support. So I don't know if it's really a wise time to be bullish, because we're in downtrends in both of those markets, and even in copper, and especially when you're talking about an economy that's realistically we're going to be slowing into the second half of the year. So that's something to also think about. Now, Stelios, I was half joking about the channel, but we are at channel resistance on the S&P. But I do believe,
indeed, yes.
No, but I was going to say I think that getting a strong move above the 4,200 level and holding it, and we're not really pulling back. I mean, and so you look at where the markets are at right now, especially just the broad markets like the S&P. As long as we're above this, I don't know, 4170 roughly, which would be the lows from yesterday. As long as we're above that, I don't think there's any reason to be on the short side. But because we could get FOMO while we're above 4,200, I still think 4,300 is a realistic expectation, because 4,300 is 127% extension of this entire move lower, and it's also 4,300 just above that is the long-term 618 retracement. So there's a confluence of horizontal resistance, 618, 127% extension. There's so much resistance up here that I think it's going to act like that magnet, if you will. And I know we've talked a lot about it on a breakout, but issue that you are facing is that right now is that you have the risk of, let me delete this again. You have the risk of being at, damn it, I keep doing the wrong thing. Hold on one second. Sorry, guys. There we go. Let me delete that and let me put it back on a 4-hour chart and let me fix this. All right. So the risk that I think you have, Stelios, or anybody who's long, is that you have you're up against channel resistance, and we're heading into non-farm payroll. Non-farm payroll has for the last 13 months beat expectations, and we got some strong data overnight. Now, Ryan, you said you're watching the wages, which I think is important, but the market will react from the headline number, and the headline number, following what we've seen this week, I still think there is a decent chance that we get a number closer to 200,000 than 100,000. What are your thoughts there, guys?
I mean, I don't want to speculate on the number. I don't know what's going to be, but
come on, take a shot.
Employment.
You got to stick your nuts out there. Come on.
I guessed 169 a couple of days ago, and after the ADP yesterday, I'm not feeling very good. So I think it's likely that we're going to get a relatively strong number. The question is, what's the reaction to that?
Right. The market's right now pricing. The market's thinking, especially after all the Fed talk this week, and the Fed's probably done raising rates. Right. You're getting all of these Fed governors that are really starting to talk pause, skip. How about if the number comes in like
two of them have spoken about it.
Pause and
one of them has been leaning that way since February.
The question is, what's the market pricing? And we are pricing around 11 basis points. No more, actually. No more, but 14. So August Fed funds is trading at 94.74. Yeah, 14 basis points. So that's more than 50% chance of a hike in June. Maybe not in June specifically, but cumulatively. And I think if they don't, sorry, go on.
Oh, I just say the market strength gives them cover.
Yeah, I think on either, it's not that it's fully priced in or not priced in at all. It's kind of in between. So on a strong number or a weak number, you're going to get basis points get taken out of that meeting or added to it. Basis points of hikes. I mean, so it's not as clear. It's not like the market's one way pricing completely something, and then you can say, right, relatively safely, I can bet against that. It's kind of in the middle.
Right. And well, I mean, we've got what, about 2 weeks? We're 2 weeks away from, or a week and a half away from, what's today? The 2nd.
2 weeks. Yeah.
Roughly. 2 weeks, less than 2 weeks away. The Fed's going to start, all the Fed governors are going to go into their quiet period, so they can't speak. So all this data is really going to start to matter. What do you think, Ryan? I mean, do you think this number is going to make a difference on market expectations, whether we do or do not get another hike? And will the market matter, or will the market care? I think the market's going to care if we get another hike.
Depends what the numbers are. We could get a 500k NFP, but if wages drop under 4%, the market's going to go with the wages. So you're going to see a pop in the dollar on the 500k, and then they're going to look at the wages number and absolutely hammer it because it cements a pause. However, we could even get a 0 NFP, but if wages go above 5%, market's going to buy the dollars on it. So this is why the wages component is going to be important. Now, if it's a inline NFP and an inline wages, well, we probably jockey around in a 50 pip range, 25 up, 25 down, and then we'll go down the pub.
Well, I think you're going to go down to the pub no matter what, Ryan.
Well, that's a given. Yeah.
Yeah. Okay. All right. So, well, let's continue through these markets, because I think this is where you guys should be, keeping an eye on. First of all, you got yields that are coming down. You got the 10-year that's really coming to some pretty, what I consider some pretty key support down here. But take a look at the gold market. So gold is stuck just below that 38% retracement. Weak number, dollar gets hit. gold's gonna make a run for, above 2K, right? But the one thing I have to point out regarding gold is that the bounces have been pretty shallow. I actually expected gold to already have broken this level, especially with some of the dollar weakness we've seen over the last 24 hours. But it looks like that was more of a positioning move than anything in the dollar, which we'll get to here in a second. But we can't even make it above 1985, which I think is surprising. But I think today's jobs data is going to have everything to do with that. One of the other things that you got to watch is if gold gets below 1930 right here, this 1930, 1935, that'd be really quite bearish. That would have to be a really strong number to get us down there. But I think anybody who's bullish gold is probably keeping that number, watching that number really relatively carefully. Do you guys have any thoughts on precious metals here?
Well, I said my thought. Anybody else?
You said your thought. Ryan, you have any thoughts here?
Yeah, I've been surprised that gold's been so resilient, given what's gone on. I'm in two minds. I wouldn't buy it here. You probably got maybe a small case to sell it here, but something like gold at the 1980, but not this close to the NFP. See what happens after. We're either going to be above or below it, and then you can trade it that way.
Right. Okay. All right. Going into, I don't know if Steve is here. I know Steve is trying to gather his things to head out of town. So I believe he is not here this morning. Hey, Dale, did you have any thoughts on gold now that you've had some time to drink your coffee?
Yeah. That's something I talked about. We could rally up to 1980, 2000. But I think there's one more decline left into July, August.
So you wouldn't be surprised to see him move down after we've got a little bit of a pop here. Yeah. All right, sounds good. Let's actually take a look at what's happening in currencies, because I think this is where things get kind of interesting. So we've got the euro. We had, in case, well, if you're not part of the ForexAnalytix community, you missed this one. We had a little inverted head and shoulder pattern. We talked about it on the morning edge yesterday. And that completed, and we've had very limited follow through thus far intraday. But obviously the market's waiting. The euro, just remember, we're still pretty much entrenched in a nice downtrend here. We've just gotten back to, once we completed all those patterns around the 618. We're just basically by that level right now. I think what we have to do is get right back above 108.50, which that'll take this downside pressure off. But I think the euro is still trading pretty heavy. Now, we have seen a recovery in the Aussie after trading down below the 618. We've bounced pretty aggressively. I think that's mimicking copper, but overall, the Aussie dollar has been in a really strong downtrend for the last, well, basically all of this year. So if you've been bullish, all of this year, it's like a clock. You're right, a broken clock. You're right, twice a day, or twice a day at least. So the Aussie's getting a bounce here, but where's it going to stall? Where's it going to stall? Where's risk going to stall? Especially if the S&P is nearing some pretty key resistance, which I assume is one of the other currencies that I find kind of fascinating here is the dollar Swiss. The dollar Swiss is actually holding up fairly well, and you would think in this environment the Swiss franc would be a little bit stronger, but it's not. It's just kind of holding up pretty well. And then the dollar yen, the dollar yen is coming down to where it should really bounce. I mean, we really should bounce from here. And Ryan, have you noticed any BOJ or MOF comments that have come across the wires? Getting some time to peruse what's happened overnight. Have you seen anything substantial?
Well, he was talking in Parliament again last night, Ueda, and he was more on the cautious side, the easing side. It's part of the communications game they're going to play. He's taken 2 steps towards tightening or giving us hints about tightening, and then he's taken a step back last night, but it didn't really have that much of an impact on the yen. But they're back in the mix, I think, and we'll see what expectations do for their next meeting coming up.
Yeah, and I think this is where you can see the support zone I have around the 138 level. It's really, really important that holds for anybody who breakout. Yeah, it's the breakout point. I think it's pretty critical. You can see it's the 200-day moving average is slightly below that. That's why I have kind of a support zone, if you will. I'm running some yen longs right now. Not dollar yen shorts. I'm short a couple other yen pairs. If you're in the community, you've seen my open positions, you know what I'm running. I don't mind being long a little yen, but as we get close to this 138 level, I'm starting to be a little bit more careful. I don't know how much I want to, how exposed I want to be as we're near this area, but I think it is going to be very critical for the market moving ahead. A couple other things I thought we'd talk about really quick. You've seen these, the NASDAQ's right back up against its highs, but take a look at the Nikkei. And the reason why I point out the Nikkei is we're actually looking at the yen as well. Nikkei came right up to channel resistance too. So, we're basically going to sign the debt ceiling into, debt ceiling raise into law. So no one has to deal with it until the next president. If there's a change in leadership, whoever the next president is going to have to deal with this. So it's not something that's going to be on the radar. I think the market has really anticipated that happening, and that's one of the reasons why the S&P and stocks have been relatively strong. But watch the leadership, watch the generals here. Watch what's happening in the NASDAQ 100 and go from there. Now we have just a few minutes before the jobs report comes out. Stelios, what's your best trade out there? And by the way, I want to point out the cable's right at the 618 retracement, just kind of hovering here. Stelios, what's your best idea going into the jobs report today? And what do you think could happen?
I think we should, on a strong number, I think we should be selling the dollar and buying risk.
Which dollars?
Sorry? Which
dollars do you think?
The ones I really like. So I would be selling dollar Norway, or the ones that are really extended in a stupid way, as I usually say. So yeah. I don't know, or maybe buying euro dollar still on dips. I don't know. It's a tough one.
You would be buying, is that because you are in the European Union? Is that why you're just curious? All right, Ryan, what are your best ideas today? What are you thinking?
I'm looking for a good headline NFP, moderate to on target wages, and I'll sell a rally in that in the dollar on that.
So you're going to sell the dollar on a strong number? On
a strong NFP number, as long as it's not matched with a strong earnings number. So
okay,
earnings comes in about the number 4.4% as expected, but we get a strong NFP. I'm going to sell that rally in the dollar if there is one, because the market's going to be trading the inflation side, not the job side.
What is your weapon of choice in this situation?
Oh, that's a good question. That's a good question. Probably dollar yen. I always like dollar yen over things like US data points, because it's usually the cleanest.
If I could get a dollar yen short off around 139.50, I would take it this morning.
Yeah, 140. Maybe the euro on a dip, because that's bounced nicely. You can really pick any of the euro. You can pick the Aussie dollar down towards that 64, 80, 65, 20 area. It's all looking good down there.
All right. So on a strong number, you're going to sell some dollars. I'm with you, especially in the dollar yen. Dale, what are your thoughts here? We have 1 minute before the data.
That Nikkei chart you pulled up
is
a 3 drive. I'd give it a shot and short Nikkei.
If you're going to short Nikkei, you could always go long yen too. That's one way you could take that trade in FX. So you like the Nikkei? Anything else you like?
That's it. You gave me my only idea today.
All right. Well, hey, I'm glad.
I hadn't looked at the the S&P looks like a 3 drive too, Blake, up against that channel resistance.
What does? I'm sorry.
The S&P. Your S&P chart looks like that too.
Okay, and that you can see it right here. And I'm going to put up the dollar yen, because that's where my focus is. I'm actually looking to sell a rally in the dollar yen if I can get, like I said, if I can get 139.50. I'm going to take it. Here's yields. Here's the S&P. Let me pull up the data flash that comes with ForexAnalytix. And here's the data. coming out. Strong number.
283. Sorry,
How about
339.
those earnings?
Oh, average hourly earnings down a little bit.
4.3, small dip.
Yeah,
that's a huge number.
So I tried to get dollar yen. I could not get it.
It missed you by what? 10 pips?
Like
Here
literally missed me by just a couple of pips. I'm so irritated in that. Woo! I mean, look at we spiked up to 139.40, and it like, dude, I had my order sitting there, and of course, yeah, I didn't get it. That sucks.
Look at
but
stocks.
You know that I got it the other day, so that's all right.
Look at stocks.
Huh?
Stocks.
Yeah, they've come all the way back from 15 lower.
Wow. You know,
so the dollar's fading again.
Market wants to go one way.
Yep.
Yeah,
at least for now.
You know, so you know, with that being said, now Stelios, I know we have Larry. Larry's here, right?
Mm-hmm.
Okay, so that's gonna be great. Actually, you know what? Hold on. Sorry, I just had to lay in a little bit of dollar yen short while I'm here, and I'll watch it while I just sold it at the 20 level. So I don't mind being short dollar yen. But let me just ask this. Okay, stronger number. Wage data didn't really move the market because it came in line. Anything else? Unemployment rate up 3.7%. That's the scary number that's, you know, hidden beneath the better headline number is unemployment rates ticking higher.
Participation rate ticked up as well, 0.1, but still, you are right.
Yeah, I mean, so you know, when the market kind of chews on this data a little bit, you know, do you think the stock market's really going to hold up here? I don't. I think the stock market's actually going to come under a little bit of pressure. Any thoughts here?
Agree.
Let's wait and see.
Oh, you're just gonna wait and see me. All right. So
participation rate unchanged still, 62.6.
What is unchanged? Sorry,
62.6 unchanged.
Oh yeah, but the expectation was for it to drop a little bit.
Oh right, I got you.
Yeah.
All right.
That is negative in terms of the unemployment rate rising.
I think the market is telling us that risk is going higher. I mean, look at the reactions today. This was a huge number. The headline number, at least. Anyway, let's see what happens in the next 10-15 minutes.
All right. Well, you got we got Larry here, and he's a great person to have here, especially as we've gone through earnings season. I'm sure he's going to have a lot to say about Nvidia, Dale, and probably all the earnings that have happened.
This is a Larry Tentarelli market above all the moving averages.
Yeah, I know.
Right, Larry?
It's great to have Larry here, and I'm going to pass it to you, but I just want to say, hey, guys and gals, thank you for joining us today. Thanks for being here with us. Thanks for always supporting us. Make sure you check out ForexAnalytix when you get a chance. Check out the Trader Funding Program if you want to learn how to risk our money and not risk your own money. So check out the Trader Funding Program. With that being said, I'll pass it over to you. Larry, good to see you, buddy.
Good to see you too, Blake.
All right. Dale, and also TGIF, thank you for everything.
All right, buddy. And also remember, at Hotel California, you could check it out, but you can never leave. Who's scared? Hey, Larry, how are you, buddy?
Dale, good. How are you? Can I, you want me to go ahead and turn my screen on?
Oh, wait 1 second, okay? I'll join. Yeah, my lighting man quit, so I had to go turn on the light. Go ahead. Let's see the victory face of Larry Tentarelli.
Okay, we're gonna do,
because I know, Larry, this is your kind of market. When things are, you know, taking out all the moving averages, trading above the moving averages, I'm thinking you had a pretty good May.
Yeah, good May. There's some good charts that are working. There's a lot of stuff that still isn't working. You know, it's a split market. If you want, I can turn on my screen share. We can jump into some charts.
Okay.
Okay, let's do share screen. I'm not technologically advanced like you are, but all right, there we go. So can you see my S&P chart?
Got it.
Okay, so I'm just watching the futures right now because obviously that that payroll number came out. Payrolls were high, but the unemployment rate was high too. It looks like it went up to 3.7. So the S&P futures, I'm just checking out the TV right now, but it looks like the futures are ticking
roaring
up a little bit.
Yeah, they came back.
Yeah. So just what I'm seeing right now is it's a split market right now, and you've got technology stocks are very strong. And as you know, I've been long triple Q and tech most of the year. Technology stocks are strong. The NASDAQ 100 stocks are strong. There's a lot of weakness, and I like gold and I like gold miners here, but there's a lot of weakness in financials, industrials, energy, materials, and where I think we are right now with the S&P. So it closed yesterday 42.21. I'm just looking to see what it's doing right now. But last month,
15.
Yeah, last month, 8 of 11 S&P sectors were lower over the past 30 days, but the S&P made a 9-month high yesterday. So what, so the bear case right now is that those 8 sectors are going to take the S&P lower. But what I think you could see is if those sectors turn up, I think they could take the S&P to 4,300.
Mm-hmm. When there's a lot of fib stuff there. A lot of patient bears have been waiting to sell it up there, 43.
Yeah, they were waiting to sell it at 42 also, and it had a tough time getting through 42. But yeah, 43
42 was more, the way I heard it framed, was more like a breakout area. And that once we got over 42, we were going to fly. That didn't happen. But I guess there were some people bearish at 42, but I'm just talking about the guys I interview and I talk to. A lot of them have been talking 4,300 since the winter, last winter.
If you get to 43 to 43.25, which was that August high, then you really have some more work to do. But I think 4,200, when we look on the S&P chart, so yesterday 42.21, futures are trading up about 0.5% right now, but it hasn't been able to close over 42 all the way back to August. So I think if we clear 42, it opens up 43, maybe 43.25, and then we go from there. But S&P is not my favorite chart. What I like much better is triple Q, and I've liked triple Q most of the year, but triple Q had a nice breakout here over 320 back in April, May. Strong uptrend. It's at a 52-week high. Now I've been expecting a pullback this week, and we didn't really get it. Once we hit this, it hit 75 daily RSI, a little bit extended over the 20-day. I was looking for a pullback in triple Q this week that we didn't get, and that's fine with me, but I'd like to add some exposure there on any pullbacks, because I do think that triple Q is going to lead us out.
Okay. So basically you're expecting what the bears are hoping for is a negative breadth and a very narrow rally is bearish, and eventually when the strength breaks, they'll get their average break, the averages. You believe that it's going to broaden out to different sectors. So what is unexploited? Is this one of them, the financials?
You see, here's the thing, Dale. I can't say 100% that I think it's going to broaden out. I think there's a good chance. But
it's just a narrative. Nothing's ever 100%.
Right. What's going to happen is I think financials are going to have to start to find a bid. Financials are 12% of the S&P. Consumer discretionary has been holding up pretty nicely, but in the financials, there's a lot of weak charts. JP Morgan is the best chart. But when you take a look at Bank of America stocks like that, they're, you know, they might be trying to put
bottoming.
Yeah, they might be trying to bottom out. The 50-day moving average is starting to flatten out. You know, I always watch the big bellwether stocks like Caterpillar. You know, Caterpillar's been in a downtrend, but if Caterpillar can clear this 50 and 200 days, so let's call it 220. If Caterpillar can clear 220, you know, then maybe that has a chance. Maybe the industrials start to pick up.
Yeah.
But I don't have anything there right now whatsoever. All I'm holding right now is tech, gold, bonds, and some.
So you're long TLT? Is that how
I'm
you're expressing it?
Yep, I'm long GLD. I like GLD a lot.
No, TLT, I said.
Oh, TLT. Yeah, I'm long TLT, but I've got to tell you, I've been long TLT since November. It hasn't really done anything. I'm probably $1 underneath my cost basis. You know, it 100 to 110 is the range, but the economy has not slowed like I think a lot of people expected it to. So TLT hasn't really done anything. I think for TLT to really break out over 110, the Fed's going to have to either, you know, stop a hard stop on hikes, or they might have to cut rates. And, you know, TLT might be a fourth quarter story.
Okay. All right.
I don't expect the Fed to cut rates anytime soon. You know, the economy is strong, jobs are strong. I do think they could maybe pause at this June meeting, a temporary pause, maybe not the final pause, but maybe take a break in June and then see what things look like in July. But I think TLT to break out over 110, I think the Fed actually has to cut rates.
Okay. All right. Yield curve inversion. Is it possible that the inversion might start to unwind and we start to see some steepening? Because I noticed yesterday. Go ahead.
Yeah, no, very possible.
Okay. And that is indicative of what? A stronger economy or just too much supply because of the debt deal? Yeah, that the Treasury is going to have to fill up the gas tank.
You know, I don't follow too much the as far as liquidity, you know, Treasury balances, things like that. I do think if the yield curve starts to steepen, it would be a sign that the economy is stronger than a lot of people have expected. Because right now, you know, when you look at these cyclical stocks, they're bad. You know, the metals and mining ETF, if you look at the energy stocks, they're all in downtrends. Now, the good thing is they can turn up. But when I look at the stock market and use that to try to gauge, you know, what does the market think about the economy, none of these cyclicals look good, you know, other than GE. GE's been the standout. But if you just take the average industrial stock or the average copper stock, you know, these stocks have been in downtrends. So the stock market says that it expects a slower economy when I look at these cyclical stocks, but they're catching a nice bid pre-market. Maybe they start to turn up. But you know where I'm at, Dale. I'm in the same place that I always am, you know, when we talk. You know, so
above the moving averages, it's all go in tech. Any of the AI stuff besides NVIDIA that you have a view on?
So I focus on, for the AI stocks, I focus on, you know, the big five: NVIDIA, Microsoft, Google, AMD, and Meta. So, you know, we've had a position in Meta since about 200 and change, just a super strong uptrend over the 50-day. I've got NVIDIA. We've had that since about 280. So that's had a nice breakout. Now, obviously when a stock as big as NVIDIA goes from 300 to 420 in 5 days, there can always be some back and fill. There can always be some pullback. You know, if there's some profit taking, maybe 350, 360. But I think the longer term picture for AI, I read a stat last night. Morgan Stanley expects that global AI revenue is going to go up 11 times in the next 7 years. So I think it's just getting started. I think Microsoft is a key name. You know, there's some second tier stocks like Palantir and Supermicro. They're just too extended for me. You know, they could definitely work, but I'm more comfortable in the bigger names, the NVIDIAs and the Micros. What's that?
These are lower floaters, and they doubled in a month.
Right. That Supermicro. So I like the bigger names in tech. I like the XLK. You know, we've had a position in XLK since about 149, 150. But I think that the tech charts, if we just take out the opinions and just look at the tech charts, they're in uptrends, 4 rising moving averages, 52-week highs. There could always be some back and fill, but on any regular pullbacks, I'd look to buy some more. We bought some Tesla just yesterday at $200, coming over the 200-day moving average. It's on track to close over the 40-week moving average today for the first time, I think, since September. Let me take a look. Okay. Yeah, it looks like it's pending a first close over the 40-week since going back to September. So, you know, I use the 200-day a lot. A close over the 200-day moving average can be used as a buy signal. A close over the 40-week, that can be used as a buy signal. So I think Tesla, I've got to stop just underneath the 50-day. But I think the upside potential in Tesla is worth the risk for me. But I balance that out. I've got gold. I've got bonds. I'm not 100% in tech by any stretch of the imagination. You know, maybe 30 or 35%, but that's where I see the best charts right now.
Okay. Yeah, I'm going to start posing this question to everyone. Larry, new all-time highs in the S&Ps or the October lows are taken out? Which happens first?
Which happens first? If I had to pick one or the other, I would say new all-time highs before the lows get taken out, but I don't have any idea when new highs are going to come in. It's just I don't think that the lows are going to get taken out anytime soon. So I think that the October low is the low in the S&P. By the same token, I'm not, you know, I can't say that I think we're going to see new all-time highs anytime soon. Yeah, I think Triple Q sees new all-time highs much faster.
All right. So NASDAQ 100 can make new all-time highs here.
I think the NASDAQ 100.
Not that far away, is it?
No, NASDAQ 100, I think, what are we, maybe 10%. So 352, that still has some work to do. It's maybe
we're
about
at 61.8 right here, I believe, of the whole decline.
Yeah. And right listen, here. You know, I don't have my head in the clouds. I know that Triple Q could pull back 5%. It could pull back 10%. I mean, the 50 days at 322, it could pull back, you know, 8 or 10%.
Right.
And still be over the 50 days. So I'm not, you know, 150% long tech, but I do plan to buy some more on pullbacks if these charts hold up.
Okay, Larry. Anything else you want to cover? What are the gold shares or miners that you like? Are you in indices?
I just have GLD right now. Okay. I like GFI. GFI is the strongest of the large caps. It's back over all the moving averages. You know, and if you take a look recently, GFI held that 50-day. And I think that's the only large cap gold miner that I know of that really held that 50-day. AU's been very strong, but they took that down near the 100-day. GDX. They took that almost to the 200-day. But GFI, if I had to go with a gold miner, GFI, I like it right here. I think gold is going to go higher. I think the miners are going to go higher. They came under some pressure with the debt, with the debt ceiling when the dollar bounced. But I think that gold and gold miners are going to go higher.
Okay. So gold miners, anything in the energy patch? Because they've been under pressure too. They've been
not yet. The only energy stock that really showed up on my screen is Cameco. They're in uranium.
Okay, that's
but,
a uranium.
I focus on the big Exxon, Schlumberger, Halliburton, and right now I don't have any buy signals in any of them. I watch them every day, but nothing yet. I'd love to see energy turn up because energy is a big home run. Those stocks when they work. So I watch them every day, but I just don't have any real buy signals yet with them being underneath the 200-day.
Okay, so housing's been on fire. You ride those?
Housing's been on fire. I didn't catch any of it whatsoever, but it's still in an uptrend. ITB is at the 50-day. I think Pulte has been stronger, but I think as long as these stocks hold that 50-day, housing is still good.
Do you know anything about the issue CE? CE is like a commodity agricultural type
Celanese?
Is that it?
No, Celanese.
No, that's not. No, I'm not sure that's it. So, but go ahead. What is Celanese? Oh, it is. It's
commodity chemicals.
Okay.
I don't have anything yet on any of those charts. Mosaic is the big one that I follow. I follow CF Industries, but just for my time frame, Dale, these things are in some bad downtrends. They could bottom. It's got
CF.
CF. Yeah, I like CF is one of my go-to stocks, but it hasn't been a go-to for maybe about a year or so.
That's a commodity, agricultural commodities, grains and stuff under pressure.
26 daily RSI. So maybe it gets a bounce, but really for me to get interested, it would probably have to be back over the 200-day. So it might be a long time for me.
Okay. So I just wanted to bring that up because that's another way if people want a kind of a long hedge on agricultural commodities, they could do it through this. So, well, great, Larry. I'm glad you're having a great May. I hope it follows through into June and July and August and September and October, November, December. The rest of the year, bro.
Me too, my friend.
Yeah. So always great hearing from you. And, when it comes to market discipline, you've expressed it every time you've been here. So the best way for people to follow your work would be?
Just real quick, so they can go to my website, bluechipdaily.com. We've got a 30-day free trial. Also, they can find me on Twitter at LMT978.
Larry, thank you for your giving spirit and sharing what you're doing here during this, debt ceiling that I thought might turn into something messy, and I was wrong. Good to be wrong about bad stuff anyway. So we'll see what the market does this summer. And I know that if things shift, you're not afraid to just cut the cord. So follow Larry at least minimum on Twitter, LMT978. Check out his free trial. And thanks for capping off our week, Larry, today. Very well, capped it off very well.
Dale, thank you as always, my friend. It's great to talk to you, and I look forward to our next conversation.
Okay, my trading warrior brother, Larry Tentarelli, everybody.
Dale, have a great weekend.
You too, buddy. So thank you, everyone. I hope we added value to what you're trying to accomplish. And we'll do it again next week like we do it every other week. And consider becoming part of this community. Thank you, Patrick. And that's going to be a wrap. Don't just count your pips, count your blessings. And don't try and make your week on a Friday. So I'll see everyone next week. Adios. See you, Sinatra. See you, Joe.